Welcome everyone to this edition of API Craft. We'd actually originally organised this for the API Craft Bangalore and All About APIs India meetup groups, but decided to make it available to the other API Craft groups in the area, and some of you may have found it from LinkedIn. I'm John Shiel. I'm the organizer of API Craft Singapore and Indonesia, and also Bangkok. In a moment, I'll hand over to the organizer of API Craft Bangalore, that's Prasant. But I just wanted to let you know that we are recording this presentation. We're very happy to have Sandipan present. We will make it available, and of course, anybody who's registered on the website, we'll email you the link to that. It will be on the apicraft.co website. So I see a couple of people now joined. So I'd like to hand over now to Prasant.
Thanks, John. Hi, everybody. This is Prashant. A warm welcome to one and all for the event. API Banking, BaaS, and NeoBanks, the trio. The wonderful session that is going to be presented to us by Sandipan Mitra, VP of Products at Open Financial Technologies. Bank Open is Asia's first neobanking platform, which focuses exclusively on SMEs and business accounts. So Bank Open provides a variety of financial products, starting with a business current account and integrated payment gateway and automated accounting, tax filing, and developer portal, developer APIs. So Sandipan, as VP of Product, works towards bringing these products to the SMEs, bringing in more better customer experience to the SME customers, and to make banking products more accessible to SMEs. Now I'll hand over to Sandipan. Over to you, Sandipan.
Thank you, Prashant. Thank you, John, for the warm welcome. And I'm really happy to be presenting today. Before we deep dive into the, what Open does and how the company functions and all, I'd like to take everyone through a little bit of detailed journey of the entire space. How does this space evolve? From when did it start? Where is it today? How does the future look from here onwards? Just give a little bit of brief about each of them so that everyone gets the context of it. To give a brief about me, I have been in the software and specifically speaking in the fintech space for the past 5 years. I've worked in companies like PayU Financials. So I think a lot of the PayU has a presence globally, and I have worked in their India branch as well. I have been worked over there for over 3 years. I have started I joined Open. After joining Open also, I have spent almost close to 2.5 years over here as of now. Now, with this entire 5.5 years of span, whatever I have learned in the fintech has been enormous. The kind of challenges that we need to see under the hood is tremendous, which we don't get to see in the consumer space at all. So I'll be taking you through some of those journeys, some of those back-end office jobs, which we are not really aware of when we see from a consumer angle. So yeah, with that, let's start. I think we are good to go, right? Or are we expecting more people to be joining?
Well, people may join partway through, but actually I think we've got quite a few in the Zoom conference now. We may as well start. And just everyone, if you have questions, you can insert them in the chat. You find the chat bubble at the bottom of the screen, and you can open up that window. You'll see questions from everybody. So we'll keep an eye on that so that Sandipan can answer as he goes, or wait till a good moment to answer them.
Great. Thank you, John. Let's start then. So to give everyone a context of what all we will be covering today, what all you'll get to learn, and like maybe we can mutually exchange, share a lot of information regarding these things. So these are the aspects that we'll be covering. We'll be covering related to business services that are available today as part of APIs, how BaaS as a whole segment has performed or rather like evolving in different geographies. What are the different ecosystem players and the stakeholders who are there as a whole, like who unless they provide certain guidelines, or unless they provide certain help to the fintechs, it's not literally possible for a fintech to move forward. And yeah, so from there onwards we will this is how we will divide the entire 1 hour call. We are planning to divide into two halves. The first 30 minutes I'll present to you about whatever knowledge that I have. The second 30 minutes we will be keeping for Q&A. So any questions that you have, we can definitely have in the last 30 minutes. So I'll start from real basic. I'll start from banking evolution. So this might sound a very a topic which is known to everyone, but practically if you see why are all these things happening in the first place, why is there API banking picking up, why is BaaS picking up, what is the future, what was the scenarios in the past, just to give a little bit of brief about it. Banking is a very old system. Probably from the 16th century, the physical banks existed. And the whole reason for a bank's existence was trust and relationship based money exchange between people. Now, that, that really worked well until the internet era. Things were really physical in nature. There were banks, physical presence of a bank. There were branches. This worked well till the time internet came into picture. The moment the internet came into picture and it went to consumers, it was pretty much a given thing that people will not prefer a physical presence of every service that you use in the world. So naturally, digital banks started picking up. Now, where digital banks a new bank altogether? Mostly not. If you look at it, all the physical banks started building their own online presence. They bought their domains, they started moving digital, and that's how exactly the digital era started. Practically, if you ask me, it was more like the last few decades. If you look at it, that's how it was. But and the primary difference between the physical banking and the digital banking was, as I mentioned, the physical banking was more about trust and relationship based banking. The digital banking was all about convenience. Now, once these two things happened, practically speaking, the last 5 to 7 years is exactly where the entire digital banks also started seeing fierce competition from fintechs who are performing, or rather giving solutions to their customers in a much better shape. But they were still struggling to handle the money bit. Wherever there was involvement of finance, there was a problem, because it was always in every single country that any startup operates in, finance is a very regulated space. So that is where the whole concept of API banking, banking as a service came into picture. Now, banks have been built over decades. So the services that a bank offer is a lot. And practically speaking, it is not possible for a single fintech company today to start offering all banking services personalized for that particular customer, available online, very smooth experience. It is literally not possible. And that is why you are seeing there are so many different kind of fintechs targeting a particular aspect of the banking. Some are probably into lending, some are probably into insurance, some are probably doing checkout, some are doing payment gateway. So there are various kind of services who are doing some bit of the banking. Now, that is where BaaS came into picture. The whole concept of BaaS, if you see, is banking has multiple aspects. Break it down into individual aspect, and each small component that is generally called as bite-sized APIs or bite-sized services, if you look at it, those becomes a full-fledged company, and they personalize and give a lot of value-added services on top of the banking layer. Just to give a small context over here, if you look at transactional banking is simple, where you exchange money. Either you collect that money or you pay that money to someone. Now, the banks used to do only this much. They will tell you, this is your account number, this is your account details and you can collect that money in that particular account, or you will know the account details of the other person and you'll be able to transfer this particular fund. But why are you doing this particular transaction in the first place? There would be a sale in picture, right? Either you are buying a particular good or services from that business, or you're providing the same. So these are the value added services that different fintechs started building without the bank's support. Now that is where bank felt that, okay, if we do not step up and we do not build this infra to support this fintech, we will probably lose out the game from here onwards. And I'll describe much more in detail about the BaaS part later on. And this is just my hypothesis that probably the next 50 years, the whole system that we have built today, it's been controlled by a central banker of every country. If you look at physical banks, if you look at digital banks, if you look at BaaS also, it is still controlled by the center banker of the country. What does it mean, the central banker? In India, it is controlled by RBI. In USA, it is controlled by Fed. Everywhere, it is controlled by the central banker of the country. Essentially, what does it imply? Which means the people living in the country is trusting that particular central bank. Now, if they are not doing certain things in favor of the people who are trusting it, then people start distrusting that particular system. And that is already happening in multiple places. And though this is something which we are not going to cover today, like spaces like decentralized financing or crypto and all, we are not going to cover all that today. But I think in the next 50 years, we'll definitely see where cross-border payments and decentralized finance will be a very big thing. Moving on from here, if I have to first describe banking in two major aspects, there are two things to look at over here. The first one is, as an individual, you need banking services. Now, the requirement of an individual when you are using banking services is very different from a corporate. When you are running a business and you need a banking, any sort of banking services is very different from the services that you need as an individual. So that is why I just want to firstly clarify that there are two very different aspects of it. The requirements will be very different, and banks also generally maintain two different kinds of teams and their service layers, and all those products are custom built in for their individual groups. Now moving on to, if I have to divide the banking services as a few broad level things, these are probably like some of those things that I have mentioned over here right now. So for example, transactional services, right? Like now transactional services is you might visit a branch and you might deposit some money into the bank. You can go to a branch and you can deposit a check. You can withdraw some fund from your ATM machine. You can, such kind of stuff. Coming to the cards part now, there are a little more complications when it comes to card, because cards are generally global in nature. When a card issued in USA can be used in India, a card issued in Europe can be used in Indonesia and such things. So hence there are more number of stakeholders present when it comes to card and transactions related to cards. And the rest of the three things what I've mentioned, financing, asset management, and insurance, are very big part of banking. There are individual very big companies just in financing where they do only asset financing, where they do trade financing, things like that. Coming to asset management, there are the banks, of course, offer this asset management services. Along with that, a lot of fintechs, and they also provide such things. Asset management companies, and similarly banks also offer a lot of insurance related products. So broadly, if I say, these are the few banking services on a very top level that a bank provides. And when we are talking about BaaS, we are essentially saying that these services will be exposed in forms of APIs so that people can build experiences, people can build products on top of these central or on top of these core services. So if I just take an example of, let's take insurance, or let's take asset management, the bank will probably provide it. Okay, you give me $10, I'll probably ensure that you get $12. But they won't build a very good service or a, experience for that particular user. That is where a lot of fintechs come into picture, where they tell the bank that you expose this service to me as in forms of API. I will build the experience. I will know the risk that this particular person can take, then suggest relevant product to this particular person. So these are areas where the whole importance of BaaS comes into picture, where fintechs can play a much bigger role in that aspect. Moving from here, if I have to mention this BaaS, how BaaS is right now. So the picture that you're seeing on your right is just Asia specific right now. But as a whole, globally, if I just mention about how BaaS started, or rather how is the, how mature BaaS is in individual areas, or how the API banking has picked up. The entire thing started when, from Europe, I would say, the PSD2 license, when PSD2 became a thing in Europe, that is what democratized the whole banking services. So banks were made to comply with certain guidelines. They have to expose their services in forms of APIs, and it became commoditized. And hence, a lot of fintech started building on top of these banking layers. Now, bank was just the regulatory body in between, who was primarily taking care of this, the value of the asset that you're keeping. But all the other services that you need, any sort of UI components or any sort of other value added services, were all built on top of these services. So that is how the whole BaaS and API banking started. And this has been almost more than 10 years now that the certain aspect of banking is already exposed in forms of APIs in different areas. That has been done. Now Europe is probably the most evolved market when it comes to API banking, and followed by, I would say, USA has been picking up. A lot of developing countries like India, Brazil has been picking up a lot. A lot of neobanks related to these particular fields have also started. So I'll mention few names when it comes to individual countries, how they have picked up on the BaaS side of it, how what kind of products they have built, what are the different fintechs, what all challenges they have solved in those particular countries as well. I'll come to those side, and also I'll just quickly maybe include Open's proposition within 2 minutes if possible. Now, let's think. We spoke about so complicated banking services that we're talking about, right? Now, when we are saying about stakeholders, who benefits, or for whom are we doing all this? If that has to be listed down properly, that who are the ones who will benefit from it? Why are they participating in the whole ecosystem? Now, I'll broadly classify it into few aspects. The first aspect is the entity, the bank. The bank is the major for-profit entity, you can say. Now, initially in the conversation, I also mentioned that every country has its central banker. So central banker is also an entity. In India, it is RBI. In USA, it is Fed. But there is always a central banker. The primary job of the central banker is to control the bank's greed and how they're operating. Is there any fraud going on? That is what essentially a central banker does. And they print currency of that particular country. They control the inflation. They control the interest rate. That is what a central banker does for any country. And they're a very essential, ecosystem player in the whole aspect. Second major is when the entire digital shift happened. Before the digital shift happened, actually, every bank were operating on their own. There would be physical ledgers. There would be, a lot of paperwork and things like that. But when things moved digital, there has to be some IT company who would be building all these softwares for them. So there are many companies in the world. There are companies like Finastra. There are companies like Finacle, there are companies like Bank. These are all providers of these underlying core banking system. Now, when that core banking system was built, on top of that, every bank relied on top of these core banking systems. So this is one of the stakeholder in the whole thing. Now, and these are like, today we might A lot of countries, what happens is, even in India, what happens is we keep hating banks by saying that, okay, their tech is really bad. It's very old, all legacy technologies and all. But we also need to understand that these technologies and these building blocks were built 3-4 decades ago, like probably 1980s, 1970s, 1990s. These are the time when these things were built. And since this is a very big system that we are talking about, this entire banking system is a very big system that we are talking about. Change is not that easy. Though they are trying very hard, every single country is trying very hard to change these legacy systems, but it is not that easy. So they are one of the core components, these software service providers who are building these underlying core banking systems. So they also work with the banks to, gather a lot of requirements and improve their tech, make things much seamless for the end users as well. I think apart from these, there are a few other players when it comes to processing any sort of transactions globally. The major players are like card networks. If I take, for example, like Visa, MasterCard, these are all Amex, Discover. These are all global card networks, and they're essential components in the ecosystem as well. Now, whenever a card which is issued in USA is getting swiped in England, someone needs to know, can I issue this particular, can I allow this transaction to proceed? Because a bank in USA will not talk to a bank in Europe, or a bank in Europe will not talk to a bank in Singapore or Vietnam or anywhere you take for that matter. These banks need to have a central body globally who will say that I will control all these transactions whenever it gets routed via me. That is why this card network came into picture, and Visa, MasterCard, Discover, American Express, all these are part of the entire ecosystem. So all these banks are finally, all these card networks issue cards of different banks. And whenever as a consumer, whenever you are using a credit card in a particular machine or any e-commerce website or any POS terminal, whenever you're using this particular card, one touch point definitely goes via the card network, and the card network says, okay, I'm allowing this transaction to happen. So they're also a very important ecosystem player in this particular aspect.
So, Sandipan, we have a couple of questions. Are you ready to take questions at the moment?
Yeah, sure. We can take. Not an issues at all.
Okay, so the first question is from Tony Chen. His question is, how can the average consumer be convinced that bank as a service is secure? And what are the technologies that help in persuading, in giving that level of comfort?
Okay, so I'll break the question into two things. I think, how can we convince the consumer that banking as a service is important? And second is about, the second part, what did you mention? The first part was,
I think there's technologies that help to secure it.
Yeah, so I'll take it in two parts. The first is, when you're saying banking as a service, you see the entire banking ecosystem runs on trust. If the person doesn't trust you, no matter what you're trying to sell, it's ultimately that particular individual's money you're talking about. And that is a very important thing to understand. We have been in this fintech space in India for the past 3 years, and probably we have just scratched the surface when it comes to deposit from us, from our customers. So we have, till date, we have collected deposits worth of $700 million. But when you compare it to a bank, a full-fledged service bank, in India also, for that matter, it would be much higher than that. The primary reason being is, when you're specifically mentioning, I do not have a physical presence, I'm a digital only bank, naturally you need to work 10 times harder than those physical banks to establish that yes, they can trust you. And generally what we see is, with low ticket sizes, like for example, where your entire business you're talking about is probably $100, $1,000, it's still easier. The moment you're talking about millions of dollars, or rather billions of dollars, then trust plays a very important aspect. Just if you want to really understand this component, just think about if you become a millionaire today, will you put $1 million in a neobank, in a digital bank, or will you rather go to JP Morgan or Wells Fargo and put all your money, right? That's a very easy way of understanding what works and how does trust play to our individual strength also. Coming to the second part of the question, what technologies really help? Practically speaking, end consumer do not really care about the technology that you're using. All that you need to provide to them is a better experience of the service, which banks are not able to provide, primarily because they are lacking, they are not self-dependent. A bank will probably have a service provider who will build all this system for them. So they will gather these requirements that, okay, a lot of our customers are not liking the way, say, a loan is processed. We need to improve this service. They will then gather all these requirements, go to the IT service provider. They will understand something else, and whatever comes as the end product will not really the thing what the consumer wanted. That is where fintechs do a better job. And why banking as a service is liked by banks also is the very reason. Banks initially were very much against the fact that fintechs are coming into this particular space. Then they slowly realized that there is a way of coexisting. So fintechs will build the experience on top of the banking layer that these people are expert in. So to answer your question on the technology front, I think you need to choose the latest technologies that is available today to improve the customer experience, because that is exactly the place where the banks will be lacking.
So the second question, and maybe you have a slide on this, is from Luca. I think Luca is based in Europe, so he's very familiar with PSD2 and the sorts of regulations around who a payment initiation service provider is and who an account information system service provider is, and the requirement for secure customer authentication. I guess the question is, in other regulatory jurisdictions, what are the protections for what are the security and compliance mechanisms that apply?
Got it. I think I'll be able to explain about few of the countries that I'm aware of. I'll not be able to explain about all the countries, primarily because we are mostly operating out of India and I keep track of few other countries only. Mm-hmm. So just the way PSD2 is a sort of guideline that is used in Europe. In USA, when you're offering a checking account, you need to provide it with FDIC insured account. So FDIC insured means the customer who's getting this particular account gets an assurance that in case this company goes bankrupt, because you're talking about a small fintech, there is a very high chance that the fintech can go bust. In case the fintech goes bust, that their money is safe. And hence there is a every checking account that you get in USA, you have to provide FDIC insurance with it, like FDIC insured checking account. And what essentially it does is up to 100,000 or 250,000. I'm not exactly sure about the number right now, but up to 100,000 or 250,000 of your deposit is protected by the government of USA, essentially by the Fed. So,
and what applies in India?
Yeah. So in case of India, what happens is a similar concept. Now coming to India, again, here a fintech cannot open a bank account directly, as in the underlying account will belong to a bank. So a fintech is just a layer on top. Now in India, such kind of things also exist. So every individual account, savings. So we have two different kinds of accounts. For individuals, we have savings accounts, and for companies, we have current account. For savings account, there is a regulation that up to 1 lakh rupees, your capital is protected. So if you're keeping some money, up to 1 lakh rupees, your capital is protected, even if the banks go bust. So the central government, regulatory body, which is Reserve Bank of India, they protect up to 1 lakh rupees per depositor. So that is the case for India. And generally the way fintechs work, like all the neobanks or all the digital only banks work in India, is they work in collaboration with the bank. The bank is the licensed entity. So whenever you show that this customer had deposited this much money, is transacting this much money, essentially the bank is reporting to the central banker that this is a customer whom I know. I have all the documents of this particular customer, but it was not done by me. It was done by one of my banking correspondents. So we have a concept called BC network, which is banking correspondent network. What essentially it does is the bank can allow certain other entities or individuals to do all these paperwork or any sort of these transaction processing on behalf of the bank, but the responsible one is still the bank. So that is how this concept is particularly famous in India. The primary reason being there are a lot of last mile challenges that is present. A bank might not be able to service a tier 3 city in India, or rather I would say a whole area of let's say 100-kilometer radius probably will have 3-4 banks, and that is a reality as of today also. And practically speaking, these 100-kilometer radius, all the people put together, if you add up their money also, will probably the bank can't run profitably in that area. And that is where the whole concept of BC network comes into picture. These people can, like a small shop owner, can collect this money and they can indirectly deposit, and such kind of cash collection, cash management services for a loan that was disbursed online. The person is saying that I can only pay back this amount in cash. So the BC network can collect this cash and then indirectly deposit into the bank account.
Okay. So we have a couple of other questions, some of them related to Singapore, but perhaps we can cover those after you've done a little bit more of the presentation.
Sure. You want to take the question now?
Well, there was a question about e-wallets and are they basically virtual banks? I think in Singapore at least, an e-wallet license is not a virtual banking license. The virtual banking, the digital bank licenses that are about to be granted in Singapore are full banking licenses for retail or for corporate banking. But an e-wallet license has severe limitations on the amount of money that can be put in an e-wallet, and it's essentially a prepaid or wallet that you put money into, and there can only be a certain amount of money in that wallet. So it reduces the risk. It's not the same as having a banking license.
Yeah, John, I think it is very much similar in India as well. So over here as well, e-wallet has a lot of limitations. You cannot lend to these customers. You cannot you cannot loan any amount to these customers. There is a transaction limitation of every wallet comes with certain limitation that you can only add. It works as a prepaid system, so you have to add the money in this particular account and then use it. But just to set the context right, I'm not sure if how this has panned out in other countries, but one of the best product that India launched so we have I would say a fintech body by all the banks association along with the central banker called NPCI, National Payment Corporation of India. So NPCI, what they do is they are a for-profit organization and who builds products keeping in mind the larger picture. So they would probably see what are the payment ecosystem that works in other countries, which is really good. And then they bring that same to India as well. So one of the product that was launched was called Unified Payment Interface, UPI. And since the UPI has come to Indian market, the number of payments that UPI processes is extremely high, especially for low ticket sizes where you are buying one pen and you can, like if you're swiping your card, what happens is that you end up paying a lot of commission when you're swiping that particular card. And that is not very relevant, like that is not really accepted in India. Like, I mean, people do not like paying a percentage of their profit every time a customer is buying something. And UPI is a completely free peer-to-peer or peer-to-merchant payment network. So the growth of UPI payments has been extremely high. And it was launched in, I think, if I'm not wrong, 2017. I might be wrong about the year, but not more than 5 years ago. So it was launched in 2017, and even within the first 3 years itself, it's almost processing payments as high as a credit card. So I mean, that's just a the thing that worked really well. And I think right now USA is also exploring that how India has built this UPI network. So they're trying to essentially figure out if that can be implemented in other countries, especially in USA.
Okay, UPI has certainly been successful in India, and I believe that Singapore is interested in adopting something like that model. But Singapore already has the NETS system, which is has much lower transaction fees than the credit card schemes, credit and debit card schemes, and so a lot of merchants prefer people to use the NETS scheme, which is only for domestic payments within Singapore. I'm not sure it's exactly the same as UPI though, but perhaps we can learn a little more from the other things you have in your deck.
Got it. So I'll move on from here. So I think we have probably covered a lot of things. This is probably the last thing that we want to cover is the regulations part. Now, as I mentioned that like by now you would have already figured out that there are so many ecosystem players, and each of these ecosystem players is governed by their own regulations. Just to give a picture about how many regulations probably you need to maintain if you're running a fintech in India is close to 32 per company. You need to maintain close to 32 regulations if you're in the fintech business. Now, these regulations starts from very basic things to very high tech things as well. I'll just mention one or two. For example, if you're running into a cards business, if you're doing any sort of cards business where either you issue cards with the help of bank or you process payments, you need to have a compliance called PCI DSS compliance. Now, in order to get a PCI DSS compliance, it's not a one-time thing. Every single quarter, your company will get audited by PCI DSS regulation bodies, and they will check whether your system is up to the mark. Can you actually process payments on behalf of customers and the merchants? So like this, there are many other regulations that you need to go through. When it comes, now this is particularly for a fintech. Now, when we are talking about banks, for example, there are many compliances and regulation when you're trying to work with bank. When you are creating a customer in the bank's records, there are certain things that a bank will probably check. That have you been declared as a criminal in India or in any other country? Do you have any default somewhere else? Have you ever been to jail or anything of this sort? They will check all these sort of things, and anything where they find red flag that okay, this person would have done some sort of crime or some fraud somewhere, not in India but somewhere abroad. All these things get marked. And
so can I clarify then? When a fintech is dealing with a bank or is partnering with a bank, and is basically the bank is providing their banking license, the things you mentioned about the KYC, know your customer, the anti-money laundering and sanctions checks, are they the responsibility of the bank or are they the responsibility of the fintech?
So right now, if you ask me, a lot of fintechs are actually trying to solve these parts. What they're essentially saying is a bank will approx take, let's say, for example, 3 working days to do all these AML checks, fraud checks, anything, KYC verification, and it has a huge department which processes each of these documents. A lot of fintechs, what they're propositioning is that you give me all these bite-sized APIs to open a checking account, to open a savings account, current account. I will do all these checks on behalf of you. The primary challenge what we have over here is the bank need to trust that this fintech is doing a similar job, if not better, than the bank. And that is not the reality as of today. And hence, like across many markets, I have seen a similar thing. Like, for example, at least in USA and India, I have seen the same thing, that a fintech will promise the customer that you come to our portal today, you apply for a new account, your account will get opened in 24 hours or instantly, or someone might say 3 days. And it doesn't really work that way. because the fintech is trying really hard to really do it within that time period, but there are external factors which guide these things. And then when you go to the bank might say, okay, this document is not right, or this person might have that sort of a fault, so I'll not be able to process. And that is where you have to again go back to the customer, get more documents and things like that. And this is a challenge everywhere in the world, if you ask me. I'm not sure about at least other places, but especially in India and US, this is a big problem even today.
So certain places have tried to streamline this. I think Estonia, well, part of it depends on the availability of the digital identity. So India has the Aadhaar system. In Singapore, they have a national digital identity called the SingPass, and there is a service provided by the government called MyInfo. So it essentially asks for a bank or an insurance company that can offer a customer, when signing up, the opportunity to consent for the government to share their information that the government has with the institution. But it's a consent-based mechanism, and it's and it relies on a connection from the bank to the MyInfo system, and the customer signing in with their SingPass to MyInfo.
Yeah. So to answer, like probably on the similar lines in India, you rightly mentioned that from the time Aadhaar has come into the picture. So just to give a context to the other fellows, I think Aadhaar is a universal identification system that India launched a few years ago. And what essentially right now government of India has allowed, or rather RBI has allowed with the help of Aadhaar, is in individual banking, you can do everything digitally using this universal identification system. But when it comes to corporate accounts, where a business is essentially asking for a banking services, it's still high. There are some areas which is really gray areas, like RBI has not really told how to navigate those. So a lot of people are actually exploiting that particular side. There are areas where RBI has strictly mentioned, no, this has to have a physical presence, or the bank has to do it. As a fintech, as a completely digital processes are not allowed. So for example, in India, when you're opening a business current account, there is a mandate that the bank, someone from the bank has to visit the physical location of the company. Now that itself is a task. If you think about such a huge country, so many people every day, so many businesses are getting opened. When a bank is asked to visit the physical location of the company, it's a difficult task, right? You have to coordinate and sync your time when to visit. You cannot do it at beyond business hours. The good part of digital things is that you can do it even, like, when it's really late night, midnight, you can still apply for a bank account. But that is not possible when you are systematically saying that there has to be a physical touch point. So immediately the time period of the day reduces. You have to find time. There will be a bandwidth constraint over there, because a system, it's not a system who's doing it, it's a human who's doing it. So there will be a lot of constraint that automatically comes along with it as well. So yeah, so these are exactly what I'm saying about regulations. And just a point that I want to really share at this moment is, let's see, when we are talking, I'm saying that in India, there are so many different rules and regulations in the banking ecosystem that you need to know. Now, when you're moving away from India and you're going to Singapore, you need to know their rules and regulations and compliance. When you're going to USA, you need to know their. And this is the whole idea, that when you are navigating with the central banker of the country, you have to comply with each country's central banker. And that is probably it is just my hypothesis that maybe in next few decades we'll probably see decentralized finance pick up a lot. It's already like some bit of steam is happening. A lot of players are building some bit of products related to decentralized finance. But until people start accepting on a daily basis any product related to decentralized finance, it's not gonna be a mass product as a whole. And of course, the central banker of the country is not in favor of it. because they will lose the whole control. That's the whole point of being a central banker, that you will be controlling the economy and the money flow into and outflow of the country. But that primarily you'll be losing once DeFi comes into picture. So yeah, I think, yeah, sorry, Prashant, you're saying something?
Yes, Sandipan. So just extending your thoughts on that, a large landscape like India, where banks are not really, may not be accessible to everybody closer to. So there are two questions from the participants on, like one is on the open bank. How does open banking and BaaS helps the microfinance? And other is, how can BaaS be applicable to people in rural areas who don't have any bank account? So are there any specific activities that Bank Open has, your company has taken on towards this, reaching out to those SMEs in the rural areas, and how do you do it? With probably an example might be of help here.
Got it. So I'll break it down into two things. Probably first time, a person who's situated or located in a tier 3 city in India, imagine if there is no digital way of getting a banking service, the person will have to rely on the physical service. That is one thing which we are trying to primarily solve. Our target audience is SMEs and startups. Now, startups are, of course, probably not going to be tier 3, but the SMEs, there are small businesses, there are individual run businesses who need these banking services, and they are located in tier 3 cities. So now, since the whole thing has moved digital, they can, sitting at their home, they can do a full account opening application at any time that they want. That is something that we are solving. But still now, because the compliance says that in order to provide a business current account, there has to be the bank's person who will physically visit. That is still reliable. We have to still rely on the banks, which means though all the documentation that was a physical paperwork before has now become digital in nature, there is still a point where a human is actually visiting a business and saying, yes, I have visited this business. This is a legit business. There is no fraud going on. Then the person comes back and, like, whatever they need to, their procedures they have, and then your account gets opened fully. Now, these are one aspect of it. The second aspect is the services that we provide. Now, just to give an example, if you have to apply for a loan digitally, lot of people, so there are very geographic level challenges. For example, there are lenders in India. When I'm saying lenders, there are multi-level and multi-graded lenders in India. Talking about the top lenders are the banks. Then if you go a little notch below, there will be NBFCs who do lending. Then there will be microfinance companies who does lending. Now, banks will of course not reach out to this tier 3 area. So that is where the microfinance and NBFCs comes into picture. Now, all these players, if you essentially see, microfinance institutions take the help of a fintech player to improve all these experiences. And then they, so Open also does the same thing. What we do is we give a universal interface for multiple microfinance companies, which means a customer who's applying from a tier 3 city in north of India, only certain microfinance companies will service those areas, because that's how it works. Microfinance means everyone will have a stronghold in a particular geography. Someone will service only south of India, someone will service only east of India. So we build a unified interface for the consumer. Now the consumer will apply without knowing who is giving me the money, but we know who operates in which area, and we will navigate all these things. And then we pass these particular, we do the entire closure, we figure out who's the microfinance company who can process this, and then essentially we close this as soon as possible. Now, if there are the alternative is, if you are working with a bank, you can do this maybe on a larger scale, but it's slightly hard to navigate when it comes to banks compliance and all that, but it's slightly easier to work when it comes to microfinance companies and NBFCs. So that's been our experience working in this particular area. I hope that answers your question.
Yeah, yes, Sandeep, thanks for that. So one more. So
Yeah, sure.
from whatever I have read about Open, I understand that you offer around integration with around 50 plus Indian banks, right? So one of the questions is what sort of APIs are Indian banks opening up, and what are the few vast value-added services built on top of it?
Yeah, so so on one of the initial slide I had mentioned that what are the different categories of banking services. Now
Right.
I would say there are three primary areas where banking services is exposed as BaaS or as APIs. uh, I mean, by every bank, almost every bank has exposed that particular side. First is transactional banking. Now, by transactional banking, what I mean is when you're trying to collect money, or when you're trying to pay money using that particular account. The second is cards. Now, cards bank is only, so there are a lot of in-depth things which I'll just touch upon a little bit so that it gives you a context, and you can probably read up further, whoever is interested in this one. There is a concept called bank identification number. The bank's only job when it comes to a card issuance in India is BIN sponsorship, which means the first 6 digit of the card number denotes which bank this card belongs to, and that is called the issuer. Now, that is what a bank does. You still need a infrastructure, as in a system in place, which is given by Pfizer, which is given by EPS. These are software service providers who basically gives you card management solutions. Now you need one of these providers to give you rest of the BaaS and APIs. They have built everything. This is all systematically built. They have been doing this for years now, and one of their product is this card management solution. You, as a fintech, you need to navigate with these people, like a company like Pfizer or EPS, who's basically the card management solution provider. You need a bank who will give that bank sponsorship, the BIN sponsorship, the first 6 digit of the card. And you need a card network partner, which means you either need Visa or MasterCard, or in India we also have RuPay. In India, Discover and uh, Amex, Discover, these are not that well used. So if you are looking into this aspect, I think these are the three card networks that you can explore. And once you are able to gather all these things together, I think the APIs are pretty well available in cases of cards. The other few areas that I mentioned, that insurance, asset management, then financing. Now, financing is something which, as I was mentioning about the previous one about microfinance institutions and lending institutions, it is still finally the whole underwriting is done by the person who's disbursing this money, the entity which is disbursing this money. So as a fintech, if you are the one who's underwriting this amount, then you can smoothen you can enhance the experience of the user to any extent that you want. Practically, for that matter, you can even say, I'll not do any checks for this user. A user comes to my platform, I want to give $100 to this person, I'll give this $100. Now, what check did you do? Nothing. So what's the guarantee that this person will pay you back? That is also nothing. That is exactly where every institution, it varies, and the greater the ticket sizes, the higher the compliances and checks that is getting done on this front. It is much lower when it comes to asset management, because the whole idea of asset management is you are giving your own asset to the bank or to the NBFC or to someone else. So it's very easy. It's you just need to do KYC. So essentially KYC is just 2 documents of an individual and 3-4 documents for an entity. So like a corporate entity. So once you have that, I think you can directly go to any of the asset management companies in India, and you can use their they have the BaaS setup with them, so you can use that. Coming to the insurance, again, it's a similar thing is implied when it comes to financing as well, because essentially insurance is also same. The bank has more to lose over here. So what I mean by that is, let's take 2 separate examples, one as life insurance, one as general insurance. General insurance is still easy because the entire amount, or rather the coverage, I would say, is much lesser. So there are a lot of bite-sized insurance product. Like just to give an example, from Amazon, you're buying a TV, and you can, okay, let's forget Amazon. You're probably going to booking.com and buying booking a hotel over there, or booking a flight over there. And you can also take an insurance that in case your bags get lost, I'll cover the entire charges up to X amount of money. But for that insurance, you need to probably pay 1/100th of that total claim. Now that is how these are called OTC insurance product. These are very easily available in terms of BaaS services and APIs. But when it comes to life insurance product, it's not really that easy. And if you are and practically speaking, life insurance is not something which a fintech can provide by themselves. So because when you're taking a life insurance, essentially you're saying, if I die, this particular company will cover all the charges. So like whatever I paid the premium for, they will cover for me. So which means you're taking a trust on this particular entity for a prolonged period of time, which is probably your lifespan. It can be 60, 70, whatever years. Now, will you ever take a bet on a fintech that will this fintech survive 70 years later or 50 years later? Most cases, no. So that is why you will trust only the top banks or the top insurance institutions in the country. And that is where life insurance as a product is generally not a very, like BaaS kind of a product. And yeah, I think that more or less covers all the banking services. There are many others. I mean, it's an endless topic. There are things like trade financing. There are things like Forex. Each of them has their own challenges. But yeah, more or less, if you're focusing on one particular area, there is BaaS services and APIs available.
So, Sandipan, I'm conscious that we've gone to an hour now. What are the most important points that you wanted to identify from your slide deck?
So I think we are almost at the end. So this is the last point that I just wanted to touch upon. I have already touched upon the BaaS and API banking as a whole, and how matured each of these geographies are when it comes to BaaS. This is probably the last part that I just want to mention about NeoBanks and what is this whole buzz around NeoBanks. What is the reason for its existence? Technically speaking, neobank and digital bank. Okay, let me put it this way. When you are using banking, there would be another reason why you are trying to use banking in the first place. So I mentioned initially only, when you're collecting money from someone, there is a reason why you're collecting this money. Either that person or entity would have provided you a service or a good, and you're paying against that particular thing. Or if you're collecting money from someone, which means you have paid something. You would have provided a good or a service. Now, banks don't provide those products. Like you can't generate an invoice for a work that you have done in a banking website. This is where neobanks came into picture. They told the whole proposition of neobanks is that I will build end-to-end products. If there is a banking is just a component of the whole for running a particular business. So I'm talking about the business aspect of neobanking because we are in the business side of it. Individual side also, there are a lot of neobanks, and I'll come to that maybe in a quick while. So when it comes to a corporate neobanking, you need value-added services on top of banking. Banking is just one aspect of it. So this is essentially what a neobank is doing. They will be providing invoicing solutions, accounting solutions, managing your cash flow. If you need credit, they will probably give you the credit in the quickest form possible, with the least documentation, everything digital. So this is the whole proposition of a neobank, that any services that you want, you will firstly get the delight of using that services. There will be as minimal documentation as possible. The whole thing will be digital in nature, and you will always get value added services for these entire package. So if you want a card, you will also get like where you are spending more, like card, like basically analytics of a card. Let's take for example that you are spending more in fuel, you are spending more in rent, or where exactly you're spending this money. And these might be helpful for a individual or an organization, that where the organization is spending more money. Coming to the retail side of it, similar things apply. Like imagine you're getting 100,000 as your salary every month, and then out of this 100,000, if how is your spend split? Now, if that a neobank, a consumer facing neobank is able to provide you with all that, then it makes your life much easier when you're going to, when you want some loan for a, let's say a housing loan to buy a house. It's much easier that you have all these cash flows right in front of you. The bank which will be offering you this housing loan, they don't have to bother about any physical documentation and all that. They already have your data, so it's very easy for them to know, can you really service this housing loan, what is the interest that they should charge you. And they don't need to rely on other parties. Like there are, for example, when it comes to loan, there are entities involved like bureaus. So bureaus will basically give you a score that what is your credit score in the country, and that is again that is also again restricted by country. So every country has its own bureau score. So, and there are multiple bureaus in a single country. So all those will not happen. It is not required if you operate with a neobank. But of course, on the other side, if you really care about trust, if you really care about a physical presence of the bank, then these are things which you don't really get with neobank, because when you are essentially trusting someone, one entity who has just an office somewhere and they have no physical branches, which means you need to have a very high degree of trust. And that is when you will bank with, like, that is where you will make it your primary bank. So that is, we are yet to see that. Let's see how that whole thing pans out. So yeah, that is more or less on the neobanks. And I think in India as well as every other country, there are two kinds of neobanks that operates. One is a consumer facing neobank and others are business facing neobanks. So Open is a business focused neobank, and whatever services I mentioned for business focused neobanks, we do all of it. Yeah, I think that would be a good closing on neobanks. So I'll leave it at that. I think if we have any remaining questions, we can take that as well. Just one quick trivia that I wanted to mention before we close it, even I forgot that I had written it in the slide. Just to understand the sheer scale at which banking as a service or API banking operates, there were 66 million API calls done only in June 2019 in UK. So I think this tells about the sheer scale at which your system needs to work. Now imagine if it goes from UK to entire Europe, then to every other continent, and all throughout the year. Imagine the whole scale of the particular thing. So that is just one small trivia. I don't know whether this will not really be helpful for any particular matter, but just to understand scale, I think this is a good number. With that, I think I'll be closing the session. I think any further section, I have mentioned few of the references where you can learn a lot more about open banking. You can learn a lot more about API banking, BaaS as a whole, neobanking as a whole. So you can visit any of these. Some of them are also the central banks, the central banker of the country's website. You can go to those places as well, and you can learn a lot. For example, in the NPCI website, you can learn at different BaaS products that they have been building. Same goes for, if you want a report on the BaaS, I suggest you can go to baas.bankopen.com. You can get a BaaS report from there, and it will be really helpful. Otherwise, these are just general references. You can go to any of these, and you can also find much more things on the internet related to open banking. Yeah, with that, I think I'll be closing the session. If there are any more questions, we can take it up.
Thanks very much, Sandipan. There are some questions still in the chat. We'll save the chat and we'll perhaps send them to you, and we'll distribute your answers later.
Sure, John, we can do that. Not a problem.
Okay. Well,
yeah.
Thanks very much. Thanks very much, Sandipan. And perhaps Prasad, you'd like to make a few words in closing. Oh, the other thing is we are recording this, and we will make the recording available, and of course the chat as well.
So thanks, Sandipan, and all the participants for this wonderful session. Sandipan, your insights were very valuable, and add to it the questions were really, I believe, the thought-provoking ones to bring out the, to get the best out of from you in terms of bringing out the experience and the view that you have from your position. It was a very wonderful learning session. We look forward to more sessions, and definitely like one of the things that's there in our radar is NPCI and the UPI, a session on that. How does that work? So definitely thanks a lot.
Yeah, thank you, Prashant.
Yeah.
Thank you, John. Thanks everyone for joining in. I hope it was helpful. And yeah, I think the recording will be shared with you people. So.
And for the participants, please do watch. We haven't tracked exactly where you all heard about this event from, either from LinkedIn or the meetup groups. So please do follow us wherever you got to hear about this session. We'll be announcing the next session soon. Thank you. Thanks again.